Hey, what's going on, y'all? This is Trust My Levels. I'm back with another video. I'm gonna run through this real quick. I will not be on here for an hour. Tell you that right now because I need to study. So, Trust My Levels, intro to the Strat. You know, I'm gonna deviate a little bit from the Strat right at this moment, but you'll still have the numbers on the chart. So you'll still see your ones, twos, and threes on the chart. But today I'm talking about this H pattern and dead cat bounce. Avoid the bull trap or bear trap, whichever one you want. It could be either way. Okay, so again, starting from the basics, taking your analysis from YOLO to, oh my God, I found the trade. Follow me on Instagram, Twitter, and of course here on YouTube. Make sure you click subscribe and like the video. If you got any questions, of course, send me a message. And you got DMs on all of those. Hop in there, let me know what you need, and I'll try to help you. But do remember, I am in school. So let's get to it. Let's see here. Of course, before we get anywhere, you have this disclaimer, and I will go through this. And if you are continuing with this video, you are agreeing to this disclaimer. So first, I am not a financial advisor. Anything you hear on this video is not to be taken as financial advice. It is solely my opinion only. There are significant risks to trading stocks, futures, options, crypto, or any derivative of the stock market, crypto, futures, or anything else, any other financial instrument that you can apply this information to. Significant risk. Anything you see here that's hypothetical or could have been made or should have been made or you would have been made if you actually got into it is not indicative of future results. So do not take that information and say, oh, Trust My Level said. No, it's not gonna work out too well. So again, hypothetical results are not indicative of future results. Again, I am not responsible for any losses that you should incur if you use this information. So stay safe out there, please. All right. So the agenda is to discuss the H pattern as quickly as possible. Like I said, I'm not going to be on here for an hour. I will not. I'm about to set an alarm and actually have a timer in front of me to cut that down because, you know, I do know how to talk. I can tell you that right now. So let's get started. Let me go ahead and, definitely encourage practice. Get on demand. Practice, practice, and practice, and practice, and practice. If you don't have on demand or don't know what on demand is, hit me up. I will get you the TOS setup video. I put it together. It's 3 hours long, all in one, so you can set your TOS up the correct way so you have all the settings, all of everything that you need to start with TOS. It's a baseline that you can then go change after that. Maybe I'll put it in the description below, but yeah. Anyway, let's get this started. I'm gonna switch over to my trading view charts right here. Trading view, come on down. All right, let's see. Oh, that didn't work. All right, trading view, come on down. So, boom, there we go. All right, I have drawing abilities today. Let's see what we got. I think I do. I think I got drawing abilities. I think I got some drawing abilities today because I know people said that they could not see my cursor last time. So I'm drawing circles out here in these streets today. Look at that. Got a circle on the screen. Hey, let's go. All right. So what I want to talk about real quick is this H pattern. So if you just look at the screen right now, you're going to start seeing, and I hope you start seeing this from now on. I don't care what trading platform, what trading strategy, what you are using. You need to see this pattern because it happens all day, every day. And then you'll hear untrained people go and say, hey, I'm about to buy calls because it's doing XYZ. Okay, it's possible for you to do that when you see this. It's very much possible for you to do it, but the odds are against you. Once I explain this, you'll see what I'm talking about. The odds are against you buying calls or the opposite direction of buying puts when it's doing a certain thing. So let's just run through this real quick. So what I'm gonna do, I'm going to, what's this, the 1 minute? Yeah, I'm gonna just use this one here, 15. Make that big, boom. So even on the 15, boom. All right, so on the 15 minute, everybody's like, oh my gosh, what's going on with that H pattern? Can you help me with this H pattern? What is this H pattern? Please tell me what this H pattern is. If you don't see it after this, we really got to talk, okay? So we're gonna get you straight. But anyway, so a lowercase h is what you're looking for. All right, so if you look at this chart, you're gonna see a bunch of lowercase h's, okay? A whole lot of lowercase h's. And I'm gonna start highlighting them real quick. So I'll just use the pen, boom, coming here, that's an H. Coming here, this started as an H, but then it took off and went back up. And I'll tell you how I usually look at these later on. And then here comes another one, boom, comes out, down, boom, comes here, boom, completes that, takes off a little bit, and then comes back down, and then this does here, boom, another H. So now that you see that, hopefully you saw it, now that you see it, you're gonna see it all over the place, okay? We're looking for that lowercase h, all right? So the definition of a dead cat bounce, the classic definition is a 50% retracement after a drop. So when I tell people after every single drop, you need to start looking for a retracement either up to the 50% or 70%, or it might go past all of those and then goes beyond where it started to drop in the first place. But what you need to be looking for is it starting to curl over at about that halfway back mark. Again, we're getting to the, everybody has a 50% rule. In the fibs, we got a 50%. There's some fibs, the fibs got the 50%. We got some stratters that have 50% rules. All of that is all telling you, hey, that 50% is a very important level, okay? And then the dead cat bounce, the 50% level is a very important level because it usually travels back to the 50% and then starts to curl over, curl over, curl over. You might see a wick go above the 50%, but it usually comes right back down below that 50% when it works out. So what I'm looking at, here it is, this black cursor again. So I'm looking at this right here. So that's why I'm drawing. I got it here for y'all today. So what I'm gonna do is we're gonna look at this and then we're gonna just draw it out. So after each drop, I'm looking for something to come down. Here we go. I'm looking for it to come down. And then I'm looking for it to retrace back up 50%. It probably went up 50%. So I'm just guesstimating. So then I can mark that level. Whatever that level is, I can mark it. That's now a significant level because when price comes back to that, it's either going to blow through it like it did over here, or it's going to start touching it, doing all this other craziness right here. Okay. So now you can see that. All right. So how we use this, once we start getting, people will hear me say, hey, the crest of the H is at X, Y, and Z. So I'm gonna just mark that real quick. Boom. I'll just mark that. Where you at? Give me that. Give me one. Whoops, I turned off the keyboard. Here we go. Anyway, Facebook, same thing, whatever. It all has the same thing on here. So I'm gonna mark this anyway. Boom. Crest of this H on Facebook is right there. That's the crest of the H for me. So I'm looking here. Oh, I gotta mark it. Boom. Got that right there. That's not 50% at all. That's way different than what we were just looking at on QQQ. I believe that's what that was. Matter of fact, I'll take it back. Let me go back over there. And even though I drew that on Facebook, look at this, same exact thing going on over here. So we got that 50% or potential 50%. I'm not putting the fibs up here because this is not a fib lesson. If you want the fib lesson, hit me up. You already know where to find it. Trustmylevels.gumroad.com. It's there. And it goes into, you got 4 hours, something like that. What is it? 3 videos of fibs. And you can fib until your heart is full of fibs. Okay. So you got a whole lot of fibs that you can talk about. But like I said, it's not a fib lesson, so we're gonna keep on with this. So I got the crest of the H, and I'll mark that crest of my H. Do I have it? All right, crest of my H is there. So my crest of my H is 345.47. So that is a very significant level for me because then as soon as I go to the right, I look and see, hey, we blew through it and it touched it, went above it, came through, touched it, went up, touched it, went back down. So anything below here, I'm looking for potential puts. All right, so I'm looking for potential puts below here. I'm looking for potential calls above here. But The hard thing is trying to figure out where you're going to get out. That's when the strat starts to take over. Okay. So I have a hammer that came over here and said, okay, I'm going to go down. I got a 2 down, 2 up, boom. This is where we're going to start looking at the strat. But I want to just put this in, get this in your mind first before we start putting different strategies to it. Okay. So I got the crest of the H's there. All right. And then it starts to go down, 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 boom. It does another drop. After each drop, I'm expecting something to come up and start to do this, which it does, but it does not complete that H. So then again, I'm going to come over here and I'm going to mark that level, the crest of the H. We'll use that right there. Crest of the H, 343.48. Now, since it did not make the lower lows than this right here, and we got higher highs than these two candles. We got a higher high, lower low. Sorry, there we go. Hold on, let me move that out the way. So we got higher lows than these. Okay, got higher lows. And then you got the higher high, higher high. This doesn't make a higher high, but it does not complete that H. So now I have one of these, hey, I'm coming here, but I stop right here, and then I start to take off. So I've marked the crest of the H already right there. So I'm not going to take the initial first jump of this. As soon as it crosses over, I'm not going to take that initial one. So what I'm looking for is for it to come, do its H thing. Okay, it doesn't do that. Hey, it pops up. When is it going to come back down and retest this? Okay, that failed. And then the next day, well, this is kind of, I didn't even look at this time down here because this is spanning 2 days. But whatever, same thing. That level here is still an important level. This level here, still an important level because it's the crest of the next H. Same exact thing. So we get up there, that level is there. The next morning, we pop above that one. And this is the 15-minute chart. So you had about, what? I'll say 7 minutes. Half the candle, I'll say about 7 minutes to take from 345 all the way up to 347. And it came back down in that next candle. So there's a potential for that. This might not be the best one because it's spanning 2 days. So, but yeah, that's fine. So 1600. Yeah. Oh, so this is the same day. I take that back. This is the same day. So boom, you got your potential in right here, which your target with this H pattern would have been up here at the top of this candle. Just like when you're like with the strat, okay, I'm entering and I'm looking at those targets to the left, taking out the candles to the left. My target is still between here and here because you know the price has been in that area multiple times. So you're looking for any type of like hesitation bouncing in these areas. And then when you go over to the right, and I know it's going to be easy for people to be like, well, this is after the fact, but people that know me, I talk about this H all day long, every day, all day, in whatever chat I'm in. I'm in a bunch of chats, and I talk about this H all day. So I'm going to mark this one here. I'll mark that there. I'll mark the bottom of that one. I'll mark the top of that, mark of that. Price is bouncing in that area. There's hesitation in that area because price has memory. It's like, oh, last time we got here, we went up, we went down, 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 up. We didn't like that. So now this time it came in and went down and went up and went down and went up and went down. And then it continued to go down. And it tried to stay back above and then it continued to go down again. And this is where I'm talking about those retests. Like for instance, if you were using, let me get this out the way. If you were using this level as a potential for you to take a trade. All right. So something came above it. This came above it. It went up, boom, boom, almost hit that target, comes back down. The next candle retests that level. It goes back up, all the way up, boom, 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 comes back down to retest that level again, boom, boom, boom. I mean, that's 3 potential trades, even though these candles don't look like you would have wanted those trades, but during that time, they would have. And then another one comes down, touches this, goes all the way back up, comes back down. Then the next one, it tries to get back down there, goes back up, comes back down. This might not have been the greatest time, but during the day when you wouldn't see this, you probably would have taken this. And as soon as we came over here, took up and came back in that range, that is a stop. that most strategists would have been like, okay, I got in, I moved it up, the next candle goes up, it comes back in the range, probably taking my profits on that one. To watch this then go all the way back down to that, come back up again, go all the way back down again, come back up, hit that again. And even if you were not taking it the first time, you probably learned your lesson on these candles to say, all right, I'm out of this thing. So remember this H pattern. The H pattern is going to save a lot of ports out here in the streets. Let's see, here's another one. Boom. All right. So that crest is the same area right here. So we know that that's a good respected level. It's a respected level. It's respected. We can't dispute that. All right. So I'm coming down. I have a drop after every drop. And then you get the people, even though this is a 15-minute chart, yeah, you got 15, 30, 45 minutes, an hour of straight up. But, you know, there's a lot of people that's like, okay, we're going to continue in this. You're coming down from, what, 341 all the way up to 343, all the way up to 344. That's a nice game. That's a nice game. If you have a plan with it, that's a nice game. But as soon as the hour is up, boom, it takes off. But we still got that H. Still got that H. And now you're marking that H to see what's going to happen for the next one. Boom, it comes down. This one completes down there. H is complete. I'm marking that level. So it takes up, boom, it comes back down. You could have taken that where it comes from here. It went to retest that and then it went back up, but then that immediate candle coming right back down. And this is, SPY is probably inside on this time. And during this time, I would have to look. But yeah, let's look at some of, this is QQQ. Let's look at some of these, let's see here. What you doing? Why you do that? Look, look. There we go. All right. Oh, let's see here. We got the 5 minute, and this is on all time frames, okay? So you'll start seeing this on a lot of time frames, but whatever time frame you're trading on, just pay attention to this, because there's people that you'll get caught over and over and over, like it's dropping and you're like, okay, I'm getting in that, it's going back up, let me get that, like these. It's all about a dead cat bounce. And to all the gurus out there in the streets, you know, you got to tell your people about this, because when you tell them I'm buying calls, and then your calls are like, okay, let me take these stairs up, because I know we hear this all the time. The stock takes the stairs up and then that elevator down. Yeah, you got to warn your people about it, because that's exactly what happens. It gets in, we got a drop. We got that little small H right there. And we got another drop. It tries that right, well, that actually completed. And then it starts to go above that level. And then it takes up above that level. It comes back above this level here. And matter of fact, let me just do this how we do it during the trade. So I'm going to mark them. Boom. And I'm looking for this. This is what I'm looking for. I'm looking for that H crest to be broken, for it to come back down, retest that, and then go take out the portion that it tried to take out, that it went where it dropped from. That's what I'm looking for with this. It doesn't always happen, but I'm sure a lot of people have gotten like bitten. They're like, oh, it's going, and then it drops and it comes back and retests, and then it goes up and it creates that W. So the H's, we're looking for the H to turn into a W. That's pretty much all this is. We're looking for that H to turn into a W, okay? So anytime you hear me talking about an H, this is what we're looking for. Boom, that H coming up. I'm looking for that H to go try to take out this up here. It didn't do it on this particular candle, but as you can see, boom, we got somewhere up in there. But if you have a goal and a plan and you're watching this and you know where you're trying to get 20 for this particular thing, okay, it's all about probabilities. You got that probability that it's going to retrace 25%, 50%, 70%, or all the way up to the top, the closer it is, if you are trying your hardest to get into something, which I don't recommend, because this is not, you know, some of these returns, like on this right here, trying to catch a call in here, you're getting eaten up. Like in that area, you're getting eaten up all day. That's us all getting eaten up. Now, when you're waiting for these breaks to happen, like we do with the strat, you're waiting for, they got a 2 up and a 2 down, 2 rev, that rev strat right there, I'm gonna take that down. You got a better chance of profiting on that than you do on this, and boom. I'm waiting for that setup, got a 2 up, got a pop up. And then I have those levels marked also, got those levels marked. And that's where boom, it's taking it from there. Boom, that level's marked right there, boom. So now I know those are important levels, because if market makers and the market decided to say, hey, I tried to get over this after I dropped, I couldn't get over it, I'm gonna mark that. Exactly like I did right here, I'm marking it. And then the same thing for this one. They got above that level, but then they came back and retested it and went dropped it below it. Then we see the hesitation at this one. We see where it comes up above it and comes right back down. We see that, you know, resistance and stuff right here. We see, hey, all of this, it comes into play. Again, this is a little bit outside of what is normally done with the strat, but these are things that I've noticed over a long period of time. I mean, talk about this H for a while. But again, people that know me, they tired of hearing about H's, I'm quite sure. So shout out to everybody in every group that hears me come in and talk about H's. Because I know y'all tired of it. But it happens. So yeah, if anybody has any questions about this, please let me know. Let me see. What's another one? Put on Microsoft. So anything that's in SPY or QQQ is going to be doing the same exact thing, because you got this right here. That's the same exact thing. I'm marking that crest. All right, cool. I'm coming here. I'm marking the crest. What is it doing at that area? What is it doing in that area? Nothing. It tries to come above it. It doesn't do anything. But as soon as I see I got a shooter, whatever you want to call it, come up here, I got a 3, a 2, and then an immediate 2 reversal. And as soon as it starts dropping below that, boom, it goes down. Go, 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 go. So you know where your bottom of your H is. I mean, that's a good thing to know too, because now it starts breaking below that. You're like, okay, what should I take? So just mark all your stuff. And then once you mark them, and this is not an exact science, okay? You can, even if you're, just get an average in there. Get the average of those candles and put that thing somewhere so you know exactly where it's going. So now you got the bottom here, and then you're like, if you really want your confirmation, you're like, okay, market made that low, market made all of these lows up here. All right, market making all of those lows. If it breaks below that for real, all right, and then it starts to go, like you get some volume or you get some momentum behind that, all right, because then now this is where it gets scary when you get into puts and it does that, because that's one of those things that will eat your puts alive. You get happy, it's dropping, and then it comes up and does an H on you. Look at that. It comes up, you have your H. That's what you got. And then what do we say? Mark the crest. Matter of fact, here we go. This is the perfect blue example. I'm taking the average of that. I'll put that in there, whatever. Take that there. All right, so the crest comes up. Matter of fact, the crest is still at this yellow line, so we ain't worried about it. So boom, you could take something here, it goes up, comes back down to retest, and then it takes off from 294.31 up to 295.27, up to 295.46. To a scalper, these are great. But high probability trades is what you want. I'm looking for these right here. I want all of the smoke that I can get from these. Wait, there we go. From these right here. That's what I want. I want that. Yeah, this is great too. That's great too. You know, I got the H. Matter of fact, let's just look at that. Matter of fact, let's find another chart. Look at that. Look at that. Look at that. Look at that. That's beautiful. Boom. It drops, has its crest, completes its H. I'll do an H complete right there. even though we got the bottom right there, but the average of the candles, somewhere in that area. And then what does it do on the right side? Comes up above, comes down, touches it, goes up, plays with it, goes down, goes back below it, all of that. So these are still going to be, there's a crest for you. These are important levels to you. And I can come back over here and look at this because right now, so we got an up. I really like this to be in the 50 to 70% range. It's upside down H. Got this H, and then you have your upside down H. So same exact thing. Mark your levels, and trust your own levels. Trust your own levels. There we go. So then I'm starting to look for these things, and especially when we start tapping levels like that, because you got another one right here. If I'm looking at this, and I see another upside down H, and it taps that right there, and I'm like, okay, I'm looking for that, and then it comes down, it goes back up, comes down and retests again, and then takes off. Hey, again, you just got to be prepared for this. I always tell people, do not try to predict, react. Just draw your levels or whatever you do, because there's a lot of people that don't want to just give up all of the indicators or supply and demands or all the other stuff, but put this stuff on your chart. This is a simple way for you to start seeing different potential entries, start seeing bull traps, start seeing bear traps, because the bull trap is when everybody thinks it's going up, and then the sellers come in and just sell it off. Boom, 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 go. They come back down, make that H. Everybody thinks it's going up, and they sell it off. Think it's going up, sell it off. And then it's actually going up, and they come back in and sell it off again. So just be aware of this and make sure that you don't get caught in all of this. So I'm gonna be done right here because I don't want this to go on too long. But if you have any questions, send me a message. You got all of my social media stuff there. Again, I'm in school, in medical school. So just be patient with the replies. All right. I'll talk to y'all later. If you, like I said, if you got any questions, hit me up. Make sure you like and subscribe to the channel, and I'll see y'all later. Appreciate you.